So you have to understand that you want to see, when you're looking at the market moving down and you're trying to gauge whether or not the momentum is going to continue, you want to take a look at the market momentum and gauge how the market is reacting to a particular support or resistance level. So if you see the market coming down to a support level, you see that there's already, you're approaching, down here where we had 70 pips, you're seeing that the market is approaching a support area, and you've got nearly average momentum at that point already. The odds are this support level is not going to hold. Okay. Now, if on the other hand you saw much lower momentum like you did over here, that would be a good indication that support was going to hold. Okay, so momentum is going to give you a key to understanding how the market is approaching and attacking these support and resistance areas, because it's very important that the market does have momentum, because there are going to be orders built up around here. There's traders' mental perspective is tied up in this area down here. If traders thought that this area was too low once, then more than likely they're going to think it was too low again, unless they get taken out very, very quickly. If their position gets overrun very, very quickly, it's difficult for them to continue buying in the face of heavy selling, both from a money standpoint and a psychological standpoint. So you want to have a logical reason to get into a position. And I wouldn't even say just a chart pattern. If all I was looking at was, say, this pennant pattern up here, that wouldn't really be enough for me to get in. I also want to take into account just the logic of how the market works. You can see here that the market had broken through a resistance level, and now it's coming down to that, what is now support. Now I have more of a logical reason to get in, because the market is tracking near to a support area. So I want to see how well the support area is going to hold up. I then want to zoom out and see how far back does this support area go. If it doesn't go back very far, and you can see here when we place this line across the chart, there really wasn't a whole lot of support until you got into this area here, and even a little bit lower, you got down into this area here. You just didn't have a whole lot of support for the marketplace. So I can look at this and see, all right, I've got a pennant up here, but I don't really see any big support until I get back down to 97.40, down to about 9,700. So there's about a 40-point range in here where I see the market has some support. This stuff over in here got blown through several times. So if I do see that the market is around this area, I just want to make sure that there's, again, not a lot of momentum in the market so that I don't get overrun. Let's take a look at this. We'll just go ahead and run this across, and then we'll zoom in. And once again, you can see that the market took out this support level with a lot of momentum. Okay, so even if I were looking to get in at this price, you see the market hesitated right here. You've got the moving averages moving across that range. But in all of these cases, you can see here there's just a lot of momentum. Now, the last thing I want to talk about is a technique that's very useful for helping you to focus on the trades that do make sense. Okay, let's say that you frequently look at a 1-hour bar, or God forbid a 15-minute bar, but you're looking at a smaller time frame, and you've decided, let's say at this point, that you're looking to take a trade. You're thinking, man, this trade looks really good. Let me go ahead and take this trade. As soon as you're looking to take the trade, the first thing that you should do is to go up to the next higher time frame, which I like to use the 4-hour bar, zoom way out, and look to see if you have anything on the chart that is pointing to a possible reversal or a possible point at which the market might be open to providing a trading opportunity. You then want to go up to the next higher time frame, go up to the daily, again, zoom out, look and see where is the long-term trend. Do you see any, where's the midterm trend? Do you see any major support or resistance points, again, that are going to provide an opportunity in order for you to take a trade? then now by refocusing on the higher time frames and really zeroing in on some of these areas that are going to even show an opportunity, it's going to force you to break out of whatever thinking you had on a single narrow time frame. And once you've done that, you'll start to develop a habit of doing that. So you'll start to see what looks like a good trade. Your immediate response is going to be to zoom out on whatever time frame you're looking at, look and see if there's any reason to get into a trade. Go up to the next higher time frame, zoom way out, look and see if you find any reasons to trade. Even zoom in a little bit to see if there's anything recent or any other kind of patterns to trade. Go up to the next higher time frame, etc. It'll help you to refocus yourself on what's really going on in the market rather than getting that tunnel vision that's so easy to do when you're only focused on a single time frame. Okay, that's about it for today. Like I said, this one was going to be a little bit different. I hope this is instructive for you, and I really hope it provides some insight into some of the realities of trading, some of the tactics that you can use as a trader to help facilitate the most highly probable trades that you can find, and also to break out of some of the narrow thinking that can come from getting too focused on single time frames. I hope you had a profitable week this week. I look forward to talking to you again. Have a great weekend, everybody. God bless you.